Morning.
Good morning, all. Thank you for joining us. I thought we'd just jump right in. So, Will, why don't you tell us a little bit about Stripe? What are the metrics? What are the things you guys care about? And what are you doing at Stripe personally? How'd you get there?
Great. So nice to meet you all, and thank you so much, CB Insights, for having us. So I am Will Gaybrick, CFO and Chief Product Officer at Stripe. And Stripe is a software company that provides economic infrastructure for technology companies. So tools and software APIs to help businesses grow, expand globally all around the world. Our primary focus is on software developers. We see just sort of as a base case assumption that the core driver of economic growth in the 21st century will be the internet. And the people building interesting things on the internet tend to be engineers. And so therefore, Stripe's core products are actually APIs. So we track number of businesses on Stripe. We track the volume of dollars, and euros, et cetera, flowing through Stripe's bank accounts. And most importantly, we try to sort of impute the amount we're helping our businesses grow.
And what are you doing at Stripe? You've had different roles.
Yes, I have a small handful of roles right now. So I joined about 4 years ago as Chief Financial Officer. Late last year, I also became Chief Product Officer.
So you're doing CFO in your spare time?
Yeah, exactly, yes.
Cool.
But so we may have a bit of a non-traditional setup this morning because when I found out that Marty was going to be the moderator, I actually kind of wanted to interview him as well. So maybe you could give a little bit of background on yourself.
Okay, well, so I work for a little company that's been around a bit longer than Stripe. So we're celebrating our 150th anniversary. We are here to serve our clients, and that our whole business begins and ends with the clients. And we track a lot of the traditional metrics of a big company that you would expect. So revenue, profits, profit growth, return on equity, those things. And we are in the same environment that you are in, and we're noticing, of course, many of the same trends. And so we are in a big transformation ourselves right now. And actually, to turn it back to you, I first heard about Stripe many years ago because I've been passionate about APIs. I mean, who gets passionate about APIs, right? They've been around since forever. We used to call them virtual machine diagrams, right? Here's an interface. You don't get to know how the thing below you is doing its thing. You just call it, and it gives you answers. And so as we began that journey, the API journey at a very big company that's been around for a long time, some of the developers said, well, you got to hear about this company called Stripe. Stripe is the gold standard for how to do APIs, and an important part that many people forget, how to talk about them and how to document them. And so we have just boldly emulated everything you guys have done, right? Like if the way the documentation is written, the perfection and clarity of it is something that we are aspiring to, so we have that in common.
Well, thanks for saying so. I mentioned a second ago that we think about our core audience as developers, and so sometimes people ask, like, why do you focus on APIs? And it's kind of tautological. It's like, well, the products that developers consume are application programming interfaces, and so that is what we focus on building. One of the reasons why we focus so sort of devoutly on engineers is we actually did some research, I think it was last year, and more companies are now reporting that they are constrained by engineering resources than by capital. It was 61% self-reported saying our primary constraint is engineering resources versus 56% saying it was actually capital. So you literally cannot buy the engineering bandwidth that you want as a company. And so for us, as we see like our mission, which is to grow the GDP of the internet, the primary way we can do so is actually to provide better services to engineers.
And have you built Stripe without a sales force? Do the engineers just discover the APIs by internet search, and that's your new customer, or how does it work?
Yeah, well, the good and bad of developers is that they have extraordinarily high standards. and they talk to each other. So that means that if you're doing things right, you're going to hear it. You're going to hear it in forums. You can hear it on Hacker News.
It's viral.
Exactly. And so, yeah, actually, for a long time, we really had not. We had a very sort of diminutive sales team, which we've now scaled over the past couple of years. But even now, our marketing team, and we had one person in marketing for the longest time. Now we have a couple dozen, I think. But it's so much of it has been organic and driven by our users adopting our products and talking about them and so on.
So one way to think about what you're doing, and actually a way to think about what we're doing, is making money programmable. And why stop at money? Maybe capital needs to be programmable. Maybe everything needs to be programmable. So where does this all go? 5, 10, 20 years, to make some predictions.
Yeah, I like the concept of money being programmable, because if you look at the Amazon Web Services, the Google Clouds, literally the Azures, and sort of the ways in which data and compute resources have moved into the cloud, money's still not there.
Nope.
If you look at the internet, like its core protocols were designed without borders really in mind. Like, yes, there's a notion of locale in internet protocols, but the internet was designed to be borderless. And the problem is that as soon as you bring money back into the equation, like all the borders get sort of grafted back onto the map.
Yes.
And so today, money really still isn't in the cloud, so to speak. It might feel like it is because you can go to your banking portal online and send a wire or do something like that. But in the same way that you can move data around the world and send packets of data across borders seamlessly, there's so many hindrances to doing that with money. So the base layer of what we actually see ourselves building is what we call our global payments and treasury network. So one more engineering-oriented way of describing this is like TCP/IP for money, like core transport protocols for money. So this is like the base layer of connectivity, all the payment instruments, all the banking integrations, all the card networks, allowing money to sort of move seamlessly in and out of balances on Stripe.
But you're still using the payment rails that exist outside the cloud.
We are, actually. And we think about sort of deep collaboration with the existing financial system, increasing access to existing financial rails.
But you must be thinking about alternate rails.
Well, it's I think there's sort of a fine line between alternate rails and sort of improving existing rails. And at Stripe, we have this maybe not super intuitive strategy of disrupting the status quo by collaborating with banks and existing financial institutions.
So that's something we've talked about a bit. What does the financial ecosystem look like as we roll forward? So one way that we've been thinking about it at Goldman Sachs is that we used to have all these traditional categories, most of them dichotomies, so buy side, sell side, market infrastructure providers such as exchanges and clearinghouses, and then all the users of that infrastructure, market data providers, market data consumers. And then we would have other categories where there'd be 3 of them, like front, middle, and back office, usually with ill-defined boundaries. And if you look at the big banks, they tend to be these vertically integrated monoliths. So if you want to engage with a big bank in a capital markets transaction, you're going to end up using all the services of the bank, front, middle, back, all the way to the bottom. And the challenge is that not everybody is equally good at building every single aspect of the stack. It's almost like the computer hardware business was 30 years ago. If you wanted a mainframe, you would then go to a vendor and you'd buy your software and your disk drives and everything from that vendor. You couldn't mix and match. There were no standards. So we see that all changing and changing really fast, where we're looking at all the things we do and saying, where are we going to be, or do we aspire to be, the best provider of some service? And we've identified several of those. And then we're encapsulating those services in an API. And for us, success would be our competitors use that exact same API. right? So we can be ahead there, and then we're looking at everything else we're doing where it needs to get done, but we would prefer to be an astute consumer of a service. What do you think about that?
Yeah, I think, I guess zooming out, the two core services that we think still haven't really been built and that we're aspiring to build are essentially, to analogize back to sort of cloud infrastructure, would be compute and storage for money.
Yep.
And so compute being the ability to sort of seamlessly move money around the world, which again is in many cases on the back of existing rails. In many cases, those rails are sort of enhanced or improved in some way to move money more quickly or to be better authenticated, or to have fraud mitigated. But that is sort of the compute side of it. On the storage side, it is to sort of allow you to, again, put money in the cloud, to hold balances in different currencies, to sort of transmute it, move it in and out of different balances. If you think about some of our large users on Stripe, you have the likes of Shopify. Shopify payments on top of Stripe. So Shopify is not only thinking about the money coming into its own bank accounts, it's thinking about the money coming into the vast sort of array of balances of the stores connected to it, all the Shopify stores throughout the world. Or you look at a MindBody, sort of built on Stripe both online and offline. And you think about the balances that it's managing. It's not only its own bank account, it's thinking about all the yoga studios, all the salons, and so on.
Okay, so now, sorry, so I got to ask, when you talk about computing with money, and especially when you talk about storage of money, that's one of the things that almost everybody cares a lot about. Where is my money, and is it going to be there when I need it? And this generally is something that regulators care deeply about. And so I have an axiom relating to regulation that I find is useful. And it is, if it's interesting, it will be regulated. And if it's not interesting, it won't be regulated. And everything else is just a transitory intermediate state. So as you're talking about storing money, whether it's Shopify with you, where is it? Yeah. And how do I know it's going to be there?
Well, so I guess 2 points on that. For one, it's interesting to think about sort of what the new wave of fintech companies can actually glean from and learn from banks like Goldman Sachs, or like one of Stripe's oldest partners is Wells Fargo, which I think has been around for going on 200 years now. And so when you look at the things that banks have done incredibly well and that we should actually learn from them, there is a sense of security, like a robustness, a sort of way of dealing with regulatory environment and so on that actually Stripe can partner with banks to sort of both learn from and leverage. So this is one of the places where we actually really do lean on our partners. And a lot of what we do is in collaboration with our own risk and compliance regimes to make sure that we are sort of getting the benefit of the robustness and security and reliability they bring to the global economy. The second thing I'd say is that in my 4 years doing this, and still early days for us, we've learned that the best strategy is to treat regulators as partners, right? To really lean into the partnership, and that in fact, it's something that can not only have benefits for our business, but for the millions of businesses built on Stripe. So if you look at, for instance, strong customer authentication, new regulatory regime coming online in Europe right now, for background here, strong customer authentication is a requirement that payments will be by default two-factor authenticated in Europe. You have the tens of billions of online fraud per year sort of skyrocketing upwards, and Europe has said, enough, we're going to authenticate payments sort of by default. And PSD2, Payment Systems Directive 2, which promulgated this, didn't sort of fill in all the details of how strong SCA would work. And we've actually been working with regulators in Europe and banks in Europe to sort of fill in a lot of the gaps and make sure that a lot of the risks of authenticating every payment in terms of, say, destroying recurring business lines. Like if you have a recurring revenue line, like if you're a software as a service company and suddenly each time Marty has to pay his monthly bill for his Netflix subscription, say, you have to come online in the middle of the night and biometrically sort of authenticate that payment, you're just going to churn, right?
Yes.
And so we've actually been collaborating deeply with banks and regulators in Europe to make sure that they are assessing the risks on both sides of SCA. So of it not mitigating enough fraud, but also it potentially
friction.
destroying
Yes.
a lot of economic growth. We actually did some research on this, and it looks like, in the first year, you could see SCA destroying something like 50 billion in GDP, which is 50 billion euros.
Right.
It's a lot.
So we have also been on this journey and learned way back that the regulators are super important stakeholders. And just a shout out to the regulators, what they've done in the last 10 years to make the system safer and sounder is extraordinary. All of the regimes around capital testing and capital adequacy, right? So in many of these cases, we have, of course, discovered that it is a lot of work to be in compliance with these frameworks, but then there's also some incredible opportunities in there. So as more of the risk transfer trading, as it's usually called, happens electronically, working with the regulators to make sure that it's safe and sound and applying principles in railroad safety and airline safety to this kind of safety has made everything better.
Yeah.
One thing I do wonder about, though, I do this sometimes, and maybe it's a geeky thing to do, but I'll take out a dollar bill and just look at everything that the dollar bill says. Have you ever
Not
looked
recently.
at it? Not recently.
Yeah.
So it because it's all programmable,
Yeah, exactly.
right?
Yeah.
And so yes, I'm all in on making money and capital generally programmable. Like all of the elements of capital structure, what they ought to be programmable. I want to be able to take a portfolio of risk and have an API where someone says, I want this portfolio is what I got, and I want something different with these constraints and with these metrics. Give me some choices, and I'll tell you whether you're done or not. So I think all of that is happening, and it's happening fast, and it's happening in this exponentially accelerating way. But I still come back to the things written on the dollar bill. So among others, it says it's a Federal Reserve note, which means you can go to the Federal Reserve with the dollar bill, and it's a demand note, and you can demand that the Federal Reserve give you another dollar bill, right? And so what breaks the circularity is the other thing the dollar bill says on it. This note is legal tender for all debts public and private. And I actually get really curious about this stuff. I go reread Hobbes' Leviathan, right, to really understand what it means. And it means that if you owe me some money and I give you one of these dollar bills and you say, no, I won't take it, and that happens within the boundary of the US, you've forgiven the debt. That's what it means. So how does all this carry over to this new world? You talked about frictions, and some of it is the state and the legal jurisdiction.
Yeah. You know so much more about dollar bills. Actually, sort of on a related note, but coming back to something you were talking about regulators a second ago, one thing I read recently was kind of fascinating is that sort of crisis, pre-2008, 2009, actually, I think the Fed was approving like hundreds of bank charters a year or something like that.
Yeah.
And since then, there have been 12.
Yeah, I would have said lower, but yeah, okay.
Literally a dozen
in
the past decade. So I'm actually curious, like, given that there just empirically is not a proliferation of new banks, and given that Goldman actually became a bank holding company during the crisis, what role does Goldman aspire to play in sort of fintech over the next few years?
So, good question. You're turning it around, and I would say that we became a bank holding company in 2008, and then for many years after that, we did all the things that bank holding companies need to do without actually putting a lot of thought into what are the things you get to do as a bank holding company, right? We pretty much kept doing the same kinds of business lines that we were doing before, but then with all of the requirements of being a bank holding company. So it took us a while to say, what are the things you can do? Well, you can store money, and you can lend money if you're a bank holding company. And so we, in the summer of 2015, started very methodically looking at all the things that one could do as a bank holding company in the new world of 2015 without any legacy. So in that sense, well, our little tagline is a startup with 150 years of experience, right? Because for us, consumer finance was absolutely a startup. No bricks and mortars, no software relating to consumer finance. And so we came up with a list of well over 100 activities. And being an investment bank, we commissioned our bankers to write an investment memorandum on all 150, and we evaluated them, and then we came up with some. And we said, where are there activities where there's market share that doesn't have to be large for it to be meaningful to us, and where our absence of participation in the past could actually be an advantage because we can do it in a completely new way. And there again, this is another place where we're taking a page from you guys, where it's all going to be API-based, and it is, and it's modular, and you can mix and match all of the components, and it can be deployed in a bunch of ways and branded in a bunch of ways. Might be our brand, might be someone else's brand. And so this is an exciting area for us where, you know, there's some recent announcements, and we're getting into things that are very far afield, such as credit cards, right? A brand new credit card platform, and I don't think there's been such a thing in a couple of decades.
Yeah. Well, it's great to see you sort of leveraging the 150 years of experience, not only to sort of serve Goldman, but to sort of like stoke innovation in fintech generally. So we know from experience as well that to do things like store money, transmute it, move it around the world, is just incredibly challenging. It consumes enormous resources from companies. And one way we like to think about Stripe is as a sort of like an anti-incumbency platform. That if you are Amazon, if you are Google, you know, granted these are also, you know, Stripe users, but if you are one of these enormous companies with thousands of engineers, you can actually build a lot of these services in-house. But if you are the proverbial two developers in a garage, you know, thinking about how you want to innovate in fintech, how you want to build a global platform or marketplace or sort of any business where putting money into the cloud and moving it around is a first-class experience, you just don't have the resources to compete.
Right.
And there's, so the economist Deirdre McCloskey has this concept that capitalism isn't actually about capital, it's about opportunity. Right? Or like my mom has a similar framework where she says talent is evenly distributed, but opportunity isn't. And so when we think about you know, our users and sort of anti-incumbency, it doesn't mean that we're not building our services also for the Googles and the Amazons and enormous companies, but it's how can we level the playing field for the companies just getting started. And so many of the large and successful Stripe users didn't exist 10 years ago. And it seems like a lot of what you're building should have a similar effect.
Well, I heard through the grapevine, and I hope it's true, that your boss looked at our consumer finance stuff and thought it was pretty good. So that kind of accolade means a lot to us. And so on last topic, we talked a lot about globalization, but we really haven't gotten into it. It seems that after every financial crisis, there's a swing towards populism and protectionism. How does that affect you guys as you develop your business?
Well, you know, with our mission being, as I mentioned earlier, to grow the GDP of the internet, obviously, you know, protectionist regimes, which you know, increase the barriers to building global businesses, slow money and the movement of money, and to sort of, you know, over the long term, in our belief, destroy GDP.
Opposite of programmable.
Are not great. At the same time, it actually, you know, makes us that much more important and gives us the opportunity to play an even bigger role in helping our
if you can abstract all that away and you handle all that, that's huge.
Exactly.
Will, we come to an end. It's great talking with you as always.
Thanks so much, Marty.
Thanks.